All right, Joey, I got to tell you about a meeting I just had. I think it so applies to today's conversation, which is the stock market crashing? And what should I do now?
Okay. Yeah. Tell me more.
Hey, it's not everybody asking that question. Like
Everybody.
it's going down. It's going down every single week. And now I'm starting to get nervous. I've ridden this, 12, 12-year run on the market, living on the government's back, right? All this money they've been pumping into the system for so long. And it's like, oh, this is great. It's the sugar high, right? Kids in the back seat, just, I mean, that's what we've been on. Now, everybody else is like, oh, we're in a great economy, except like, no, we're not really. This is not what's happening. It's just play money in the market that's made it go up. And now it's like, oh, we're coming off that sugar high, right? We're at that crash. Now the kid is going berserko, and we're trying to figure out how do we get off that roller coaster.
Absolutely.
I just had a conversation with somebody. It was actually two guys that they were in their early 70s. And the question was, man, we've been investing in the stock market for so long, and we're watching our accounts just dive. We're trying to figure out what are other people doing. And I was like, well, I mean, people are doing lots of things. And, our company does two specific things. One, we help people with preservation. We help people who are looking for a place to store cash, get into a position of safety, and look for opportunities. And we talk about that all day, every day with the IBC, right, Joe?
That's right.
And the second place that we help people is who have maybe more money than time, who are looking for financial security, who are looking to be better investors, and who are looking to invest in places outside of Wall Street. So they want to join a mastermind group of people who are learning about how opportunities work so that they can be better investors, and then they can find opportunities and go invest in those deals.
That's right. So you have to be an active, engaged investor in order for that to happen, right?
Which is what the question I asked. I said, let me ask you up to this point, how involved have you been in your investing?
And what do they say?
They said, we have advisors, and, there's a partnership that we have. And I was like, oh, cool. Tell me about a partnership. What does that look like? Well, my advisor brings me deals and ideas, and I just tell them which ones are the ones I want to work with. I was like, oh, sounds good. Perfect. I was like, what sort of things did they bring you? Oh, stocks, mutual funds, ETFs. That sounds like Wall Street. He's like, yeah. And I'm, and they're like, now we're worried about Wall Street. We're worried that, it's going to lose an L pretty soon. And I'm like, okay, well, here's the thing is that we don't bring investments to people. We're not investment advisors. We got rid of all those designations a long time ago. But what we do have is an opportunity to learn how to be good investors, because Robert Kiyosaki says there's no good about investments. There's only good about investors. And they were like, well, I kind of worry that we're bad investors. I was like, well, that's okay. Like, here's an opportunity. Here's how you find out about this. Not only can you be a part of this group, but you can also be in a group of really solid investors, right? People who have excelled at, hundreds of millions of dollars of levels in business, who are in this group participating, that you get to get their experience. You get to level up off somebody who's done deals that you've never even heard of. And you can find out what are the questions that you should be asking, right? Maybe through this, you can ask your advisor better questions whenever they start bringing you these deals. Maybe you learn things that will help you in those conversations that would help you avoid making mistakes and help you find ways to win.
That's right. And what you're talking about, Russ, is our accredited investors only group, the Passive Income Mastermind. We affectionately call the Club 200. Go to wealthwithoutwallstreet.com/Club 200 to learn about how you could possibly apply to be a part of this. Now, okay, how did it end? How did the conversation end?
Well, I just gave them the link. I said, just like you just gave, I gave them the Club 200 link. It said, here, you can look at applying to come and be a part of the mastermind. Or if you want to get like your foot in the door, come to our retreat they're having in May. And we're going to be there. We're going to have the same sort of people who talk in our monthly meetings within our group are going to be at this retreat. And you can hear from the guy who does over $100 million of syndications. You can hear from the guy who's helping El Salvador turn their currency to Bitcoin. You can hear from the guy who does land flipping and has helped us bring in almost $15,000 a month and growing. and cash flow from the land investing side. I was like, these are the opportunities that you get to rub shoulders with. Come be a part of that. So
this is Wealth Without Wall Street, right? And just as we talked about in this episode, we talk about, is the market crashing? Is the market still the best place to invest regardless of it crashing, which we've already said no, right? I'll go ahead and just, spoiler alert. And then lastly, where are other people having success outside of Wall Street? And I think that's what you did for them. Like you kind of exposed them to the alternative that unfortunately people know in their gut, there has to be something else. That's Nobody right. can just build their financial future on this sinking sand. And that's what we're all about, Wealth Without Wall Street. Man, Russ, thanks for sharing that conversation. And thank you for joining us. To be honest, I think we need to just go ahead and jump into this episode, not take any further time. Let's step up to the table and belly up.
Welcome to the Wealth Without Wall Street podcast, your guide to understanding how to get out of the Wall Street rat race and start your own mailbox money lifestyle. Now, don't let these handsome Southern draws fool you. These financial minds are teaching our country to enhance savings, increase cash flow, and create passive income, all without the help of Wall Street. Are you ready to break through? Now here are your hosts, Russ Morgan and Joey Murray.
Welcome into the Financial Freedom Roundtable, where each week we break down complex financial topics so that you can more easily understand them and, more importantly, take action on your path to becoming financially free. If this is your first time joining us, welcome. Grateful to have you in the room. I'm Russ Morgan. They call me the idea guy, mostly because lack of follow-through guy didn't sound as cool to me. But enough about me. Let me get to my co-host, the man I like to refer to as the Italian Stallion. He's got the license plate cover to prove it, Mr. Joey Murray. Stallion, good afternoon.
Good afternoon to you, Russ. It's a beautiful day.
It is a beautiful day, but the sky's not falling. But some may say that the stock market is falling. And they're going to ask that question. If it's crashing, what should I do?
Now, hey, Russ, could you please keep the obscenities to a minimum on the show today, right? Please don't use that word as much as you can, okay?
Stock market, earmuffs, everyone earmuffs. We're talking about stock market. Today is Wall Street. We're talking Wall Street, Joey.
All right. Just this one time, I'll do it. But man, it hurts my heart a little bit.
Can you build wealth with Wall Street? That's what I want to know.
The answer is no. Immediately no.
Immediately no. So what our friend would say. Well, why is this important today, Stack? Why would we bring up this topic?
Well, I think it's important because this is the reality. When you invest in the market, you have to be asking this question all the time, right? This is the fear of not being in control, that you have to be answering this question all the time. And I think it's a reason why we don't go this way, but I think it will definitely be important for us to talk about, because people need to know that there's an alternate way to do things.
All right. So I want to discuss this during our conversation today. I was looking this up. They define a bear market, or the characteristics of a bear market, as these three things. One, stock prices are declining, marked by as much as a 20% decline over the previous 2 months, okay, from its previous highs. Two, investors often feel panicked and pessimistic. And three, oftentimes the general economy of the country or the economic outlook isn't good. Okay. So I want to break those down in a second as we get into some other conversations, but I know thankfully it's not just you and me sitting here trying to bring this together. We've got some of the greatest coaches in the nation. To my left, I got the man that I like to refer to as the true financial Sherlock Holmes of our day. No problem too difficult to solve. If I'd only known him earlier, I would have been so much richer. Said everybody, Mr. Downtown Ernie Brown. Nice to see you, Ern.
Nice to be seen. And to be honest, I don't know how much value I'll be able to give today, but one thing I can give. This is just a free tip. If you eat lunch and then record a podcast right after, and you're in a slump, decaf coffee is not the answer.
Pro tip for the day.
Why decaf coffee? Like that's the thing. That's the question. I'm not a coffee guy, but if I'm going to go coffee, decaf, that to me is like drinking a non-alcoholic beer.
Yes. Please don't.
Why decaf? I can't answer the why non-alcoholic beer, but why decaf? I like to drink coffee all day long, and I don't drink it for the caffeine. So for me, it's just one less thing.
You drink it for its rich taste or
for its warmth. It's my little mug of comfort with me.
Get you like one of those like warming blankets or something, like those little blow up water bottles that you can heat up or something.
Yeah,
I love to see Ernie doing some meetings with clients in a Snuggie. That'd be awesome.
I have a Snuggie in the house.
Oh man. Speaking of Snuggies, let's get to the retiree of the group. I know this guy's got to have one, right? Everyone who's ever retired has gotten a Snuggie as a retirement gift. If he hasn't, we need to get him one. Mr. Catch Me If You Can, when he's not killing bears with his bare hands or spear diving for tuna, he's dropping gold nuggets right here. The one and only Mr. Mark Haraguchi. Welcome, Mark.
Afternoon, everybody. Well, on the point of the Snuggie, I tried to plead my case for a Snuggie, but I was shot down by my fiance. She said no.
No Snuggies.
No.
Immediately no.
Yeah.
Well, a Snuggie is a one person item. She's like, no, we get married, bro. We're gonna like double down. We're gonna have a shareable item here.
I'm like, well, I think they have extra large Snuggies.
That doesn't work. What are you gonna put like a left arm, right arm? Like how do you figure that out?
Hey, they make it. That exists.
The
solution is bring the Snuggie into the marriage before the marriage.
So she has no choice. She has to accept all things.
I don't know where my Snuggie is.
For better, for worse, for richer, for poor, for Snuggie or no Snuggie.
It's been hidden. I don't know where it is, but I know that it's still here.
All right, I want to come back to this. I brought this up a second ago. There's 3 characteristics of a bear market, and I want to break these down. So stock prices are declining, marked by as much as a 20% decline. All right, do you guys have any idea from January to March of 2022 what the market was doing?
Not a chance.
Earn.
Yeah, I know we're down a little bit. Been on some meetings and
what's a gut feeling without looking at my notes? What's a gut feeling of what you think the market has been doing over the last couple months? And everybody that's listening in the chat live, throw a number in the chat. I'm just interested for you. What do you think, Mark? Somebody throw it out. It's easy. Come on.
Well, I'd say it's at least 10%, because I know this because from the time we decided to liquidate my fiance's retirement account to the day that it actually liquidated, there was at least a 10% evaporation.
All right.
Wow.
That didn't hurt. How about you, Joe?
Yeah, I have no idea. I'm going to say maybe 8% decline. I think it's definitely going down because people are not happy right now.
Ern?
Yeah, I agree. I'll just read some of these comments in our little chat here. We got a 40%, we got a 33%, we got a 25%, we got a 14.4%. That's very precise.
Well, so it depends on which index you're following, right? So we have 3 different types of indexes that most people will follow. The NYSE, right? The top 500 stocks. Then you have the Dow, right? Which is the top 30. And then you have the NASDAQ, which are going to be the tech stocks. So in the top 2 categories, which is what most people follow, they're down about 13%. Now, Joey, I'm going to do some fast math here. I was looking at the NASDAQ, which a lot of the stuff that you may follow is that tech stuff, right? Because that seems to be the most popular stuff out there. You see the tech stuff is down equally about 15% over the last 2 months. So are we getting into bearish territory, would you think?
I'd say that there's definitely bears in our area.
Bears beats Battlestar Galactica.
Exactly. I feel that bears are looming.
All right. So the second point here in the determining if we're in a bear market is investors often feel panic and pessimistic. Let me ask you guys another question. Did you know there's such thing as a fear and greed index?
I did not know that, Russ.
I did not either.
I didn't either until I started searching for trying to determine what the overall sentiment of the investors were out there in the world, right? As it relates to the stock markets. And it measures a lot of different things. I just went through it and got stuff. You can go to CNN.com/markets/fear and greed if you want to go search this on your own. Here's just 3 of the 7 indicators that they had. So market momentum, extreme fear, that's what it says. Oof. Stock price strength, fear, safe haven demand. So this would be where people are actually searching for going into what they would deem safer assets, treasuries, bonds, extreme greed. So where people are actually trying to flee the market, right? So in that safe haven demand, they're in a greedy, extremely greedy sense. They're fleeing toward that. So from that perspective, do you feel like we're in a bear market?
Well, here's what I'd say. I want to hear from the coaches, because you guys are the ones talking to people coming into our community, getting like this idea that maybe there is something different that I should be considering. Russ, I would say you and I talk to everybody in our passive income mastermind. What's the constant concern that we're hearing from guys and gals at that level? Financial insecurity, right? That's a big driver for people that want to be a part of our passive income mastermind. Why do they want the passive income? It's either because they want to continue to grow and have a legacy that outlives them, and they want to be around other investors at a higher level, or they just need something to start offsetting the potential risk inherent in their business or other things. So, right? They want control.
So, Ern, what is the sentiment? So, as we go into what are investors, what's the overall investor sentiment as you talk to people right now? What are you hearing from people when you're on those calls with them, coming in looking for wealth without Wall Street? What are some of the things they're telling you?
The conversations that I have, which has been a small handful as it relates specifically to the sentiment of the stock market, how their stuff is doing, is sick and tired.
Would that
they're down? They're down, and they want out. That's the conversations that I've been having.
Would that fall in the panic and pessimistic stage, or what do you think?
I'm going to go with pessimistic. Capital P.
All right. How about you, Mark? What's the overall sentiment you're getting?
I want out, and I want out yesterday.
Okay.
Kelly says she wants more control.
Yeah,
that makes sense to me.
All right. So the third characteristic of a bear market is that oftentimes the general economy of a country or the economic outlook isn't good. Now, I just went and just pulled one of the top things, New York Times article, and it starts telling me about the world economy and talking about a period of intense uncertainty as a pandemic and the fallout from Russia's war in the Ukraine are fueling both inflation and already a fragile global recovery. They're predicting that our economy is going to slow down to 3.6% from last year's 6.1. What do you think about that, Stallion?
That can't be good. That sounds like almost half.
Man, this guy.
I'm not good with the maths, but that does seem less.
Sounds like we're coming out of a winter of death, certain death, into a summer of extreme sadness.
I mean, this isn't supposed to be a happy show. I mean, but man, this is not sounding good initially, right? So I just want to throw out there, give you some context, right? Now, here's what we cannot do is give financial advice. Why can we not give financial advice, Joey?
Because we're not financial advisors.
That's one reason. What is another reason why we can't give financial advice?
Because financial advice is garbage.
Why?
Because it's only told from the perspective of the person giving it.
Exactly. So one, all financial advice, as you say, is garbage, should be treated as such because it only can come from the perspective. So I own 0 stocks. I have no money in the stock market. So I'm obviously going to be very biased. So disclaimer there. If you're 100% in the stock market and you're listening to this and you want to go like research how much does Russ invest in the stock market, the answer is 0. So you can immediately just discount everything I say from this point forward. Or you can listen from a counterpoint of view just to see, well, why do I have that perspective? And I think that each one of you probably have your own perspective. How much money do you have invested in the stock market?
I have $0 in the stock
Mark?
market.
0.
Joe?
Also another 0.
Okay. All right. So that's going to, just give context, right? So one, we are not financial advisors. Will not give you financial advice over a podcast. All podcasts that get financial advice immediately should be discounted because it can only be given from the perspective of the person who's given it. And secondly, without your information, it probably is not applicable. And that goes to all financial gurus if their first name begins with D and the last name ends in Y. I just read this comment. It was so drawing, Joey. I wanted to share it. I realized that my time is not really mine. It's my company's. Now I have to stop negotiating my time for money, and I need to start working to become financially free.
That's exactly how I felt when my daughter Adler asked me on the way to school, Dad, can you pick me up from school today? And I had to say, no, baby, I have to go to work. That's where I drew the line.
In order for you to be clear on the things you need to do and stop doing, and to know who you need to become so that you can stop trading time for money, join us right now at wealthwithoutwallstreet.com/passport.
Now let's get back to this episode.
All right. From D to Y. What are the main points we want to cover today? So I think there's a couple of things. One, is the market really crashing? And we kind of talked a little bit about that there. Is the market actually the best place for me to be investing regardless of its crashing? And thirdly, where are others having success? So if we can cover those three things, do you think it'd be a good podcast, Joe?
I think it'd be a great podcast.
All right. So is the market really crashing? I just gave you the three characteristics of a bear market. We're not at 20% down. So that was one, and if I was the guy writing that article or writing that characteristics and I was paid off the stock market, I would be re-upping that number every time because I had heard any number over 10%. But my guess is somebody, just went in there and made a little correction, made it 20%. I don't know. So it's debatable. Is the market really crashing? Depending on when you're listening to this podcast, it could be way up, right? You could be like, you guys are morons. What are you talking about? I mean, Joey, I remember like 6 or 7 years ago, I wrote an article and I posted it out there on the social internets, right? The medias, the feeds,
the interwebs,
the
Straight
tweets,
to my face.
right? All those places. I put it out
Facebook.
there. Yeah. And I talked about why my 10-year-old was smarter than you when it came to the stock market, because I was teaching her the game cash flow. And in the game cash flow, it was asked the question, when there's an opportunity to buy a stock, what would you want to evaluate, Joey? What were some of the key things that you need to evaluate if you're going to purchase a stock when playing cash flow?
What's the last 52 weeks kind of range it was trading in?
And what the price was currently, right? So whenever she would get an opportunity to buy a stock, and she knew that it was only time she would ever buy it in the game cash flow, because the name of the game is cash flow and stocks don't provide that, was if she could buy it at an extreme discount, right? With the opportunity to purchase it and sell it down the road for a big windfall. And let's just say the 52-week range was anywhere between 900 and 1,000. And currently the stock is selling at 1,200. My daughter would be like, yeah, that's stupid. I wouldn't buy it. And I'm like, yes, you're smart, but everyone else is stupid because they are buying it in that range, right? If you look at the stock market today, Mark, do you know what the current price to earnings ratio is?
No, I don't look at that stuff.
I don't either, but I go to Google before I do podcasts just so I can research, right? and it tells me the current PE ratio of the stock market right now is 34.1. Now, to give you context, that means nothing to 99% of the population out there. I got into the investment world, Joey, in 2004. I knew less about the stock market than everyone else possible. And I just remember sitting down with one of the guys in my firm, who'd been in the business 20-something years, and I'm saying, teach me everything you can. And I remember us going through this part on him teaching me the PE ratios of stocks and what's that actually mean. And I said, well, give me some context. Like, what is it today and what is it historically? He said, today it's 16, right? So for every dollar of earnings, someone would be willing to pay up to $16, right? And so I was like, oh, that's cool. I don't know what that means, but all right, sounds good. And I was like, well, what has it been historically? He said between 15 and 16. I was like, oh, so we're pretty much right there on the norm. So today, the PE ratio of the stock market is almost twice its historical norm. What does that tell you about it? Is it undervalued or overvalued?
Way overpriced.
Way overpriced. Well, what are things that would make it way overpriced, guys?
Inflation.
Well, but what is inflation?
Too many dollars chasing too few products.
And where did those dollars come from?
Government.
Right? Inflation, the true definition of inflation is just an increase in the money supply. Have we seen an increase in the money supply over the last 3 to 5 years?
Mm-hmm.
That's an easy one.
I believe it's 40% of all dollars have been created in the last, 12 to 36 months.
There you go. Right? So now all those extra dollars had to go somewhere. Where did they go? They went into the market, right? They started buying things. And Robert Kiyosaki would say they're the B quadrant, Joey.
The business owner. Yeah.
The business owner. Business owner, what type of company?
Isn't it 500 or more employees?
500 employees or more, right? He would also call those people insiders. People that are investing in that world, the stock market, would be insiders. Do you know what outsiders are?
Everybody else.
The people on the left side of the cash flow quadrant, the E and the S quadrant people, right? The people who have no internal knowledge of what's actually happening in those businesses. And those people are the ones typically investing in the market with no inside knowledge of what's really happening. So we watch the Warren Buffetts of the world and we go, well, man, he's one of the best investors ever. I should follow his logic. The problem is they don't realize he's an insider, right? He understands the companies that he's purchasing. How much insight does the average investor have into the investments that they're making on Wall Street?
I don't know that they know the names of the companies because they're so deep into the mutual funds that they're investing in.
100%. I think this is one of those conversations, though. So the question I have now, as I dig through that, just give you some context. Is the market really crashing? I don't know. I can just look at those sentiments, and I can also say, is it overpriced? The historical data tells me it is. But the real question is, Mark, I'll come to you with this first. Is the market actually the best place for me to be investing, regardless of if it's crashing or not?
Depends. It depends on who you are and depends on what you want. If you want the financial easy button and you don't want to think about anything, you just want to, show up, punch your time card, do your thing, go home, watch Keeping Up with the Kardashians, Survivor, whatever is on television. I don't actually have television anymore. And go down that road and not put the time into actually researching and whatnot. Well, then you're probably in the boat that needs to set sail with the SS 401k and just hope that you make it. But for the majority of the people that we speak to, the people we encounter, the people that are actually wanting to take control because they have a different destination in mind, they clearly recognize, wait a minute, if I put my resource into this system where I have very little control and an extremely high amount of risk, I have an extremely limited amount of access to then go do the things I want to do today. And so those are the types of conversations that we have. And those are the types of people that we interact with who want something different, who are looking for a different way to make it to the finish line. And actually, you know what? Not even just make it to the finish line, but actually have fun along the way. I don't want to wait till I'm 59 and a half, which, by the way, I don't know if you guys have read, but there is now another push to change the definition of when the actual retirement age is for Social Security. And they want to push it up another couple of years to keep it afloat. So if that happens, do you think it's too far-fetched to think that the 59 and a half will change as well? And so I want access to my money today. I want to be able to leverage it, get out and do things, create cash flow today, and not hope and pray that it's going to be there in, what is the math? Hold on, let me get my abacus to find out what that would be based on my age.
Right, exactly.
Can I jump in there for a second, Russ? Your question is the market actually the best place to be investing regardless of it crashing? And to me, this is Wall Street speak. right? It's dollar cost averaging, right? Oh, you're young. You need to keep putting money in because you're going to be able to buy it at a discount right now, right? It would be dumb for you to stop. And, you've taken that loss, keep pumping more money in because it's going to take care of itself. When it comes out on the other side, it's all going to average up higher, and you're going to benefit from that.
You get to buy it on sale, right? Like whenever things are crashing, you get to more of your dollars are buying more shares today than they were a year ago. You'd be a moron not to take advantage of it.
But I'm going to point out something you told me that I actually share in our IBC webinar, is about how I started seeing all of the different things I was putting money in before I understood infinite banking as all these compartments, right? And my 401k and IRA and those type of things were all these separate compartments. And I was buying into that idea that, oh, I'm young and I can do this. But the problem is it wasn't getting me, as Mark said, to the proper destination. The destination I had in mind was shorter term financial freedom. And that thing cannot come whenever you're constantly looking at that retirement or investing bucket as this FOMO opportunity, right? I don't want to miss out on dollar cost averaging. So I need to keep pumping money in when it's taking this crash. But I also don't want to take money out at the top. Like I'm missing out on the opportunity. When do you actually ever stop with the speculation and turn it into a cash flow? It just doesn't happen until you're that person that's essentially having to be retired, right? Like physically, they're not able to do the work at the same level. And they say, by the way, I'm tired of doing this terrible job I was stuck in for these years anyway. And then what is your life like at that point? And I bring it back to the story of the older couple I met at the beach. And she told me, she looked at me and she looked at my shirt. It said, Wealth Without Wall Street. I told her about what we do. And she said, well, I hope all this stuff that I've done, I hope it's enough. And I asked her, I said, what are you talking about? She said, I've been putting money away for all these years and we just retired. And I hope it lasts. So she's not living any more abundantly than she did before, other than she doesn't have to clock in and clock out of a job every day. And that's just no place to be.
Well, there's an older guy that works out in the gym I'm in, and he comes to me the other day and he says, hey, is it possible? I know that you don't really meet with people one-on-one, but is it possible that you could jump on a call with me and my brother? Like we're really kind of super nervous about where the market is. And by the way, this guy's in his 70s, and I'm assuming his brother's probably similar in age. And we're super scared about where the market is. And I just want to hear about what other people in your community are doing, since you're Wealth Without Wall Street. Like he has a shirt, like he takes like every once in a while, like we'll be wearing the same t-shirt, right? He'll wear one of my Wealth Without Wall Street. So we'll take shirts, and it's fun to see him doing that. But he is finally starting to bear on his mind that, man, I've spent all this time and money to get this big pot of money, right? And as you say, Joey, that it's a hope strategy, but there's really no hope at all. And they're getting concerned because the confidence level in the market is definitely turning pessimistic. So Ern, what do you think though? What is the best place for someone to invest, regardless if the stock market is crashing or not? Is it the best place for them?
Yeah. Well, just a quick roundabout. I mean, if somebody is in their 70s and is feeling that way, I think you can learn from that story. I would probably think most people listening, if you're listening to this right now, you're probably not in your 70s. Now, if you are 70 plus, just props to you for knowing what a podcast is. But for everybody else is probably on the way to 70 and might be in this accumulation mode. And just think, if you're feeling panicked, if you're feeling pessimistic, think about this guy in his 70s. He's now bearing the result of this. And guess what? It's the same feeling. It's panic, it's pessimism. And so, Russ, your question is, what's the best place to invest? Is in a place where you mitigate panic and where you maximize optimism. And I think that starts with you.
Mm.
Your ability to understand the factors in the market or in a specific asset class or in a business, something that you can turn revenue in and invest wholeheartedly in yourself and your own ability to interpret, your ability to run a business and invest in your business. It's fun for me talking to business owners. Like I was on a call yesterday, sitting right there in Joey's office. Love it when we get together, with an optometrist. And he's turning the point where he's hiring multiple doctors in and he's taking himself out. That's awesome. He's starting to get to the point where he's bearing the fruit of his own business. And that's going to create a much different financial result than that 70-year-old Russ. That'd be my thought.
So where are people having success? You just kind of started to allude this. I think it's a good bridge, right? Into the third point is, where are people having success? Mark, you're having conversations with people constantly. Sometimes this is the first podcast that they've ever heard us, right? So they haven't listened to all the different things, haven't heard us talk about going through our process of the passport, where you get this goal and you understand truly what you want. And then the second step in that process, the P, which is developing a pathway so that you know exactly who you are as an investor and matching that up, and then getting your cash in the most safest place possible with the most opportunity for you to then start investing in yourself, going through the hierarchy of wealth earned that you do so well talking about that. People may be coming to this podcast for the very first time, and any idea is new to them. So clearly, we can't say any of these ideas should be a fit for you, but just so that you can hear what other people are doing, I think it's important for us to share ideas with that disclaimer is, don't take this as this is going to work for you kind of concept. So where are people having success, Mark?
Where are people not having success? I've got clients who do land flipping, who have found remarkable success in that. Actually, one of our community members just last week was able to share with us that she took a single sale and parlayed it into a double sale and 2x'd her profit from that by having one additional reach out with the client. So, wow. I mean, how awesome is that to go from thinking you're going to get one to knowing now you've got double it? So land is doing great. We've got other people that are doing short-term rentals that are just, having phenomenal success. I think given people's concerns about proximity to others, germs and such, that short-term rentals are actually working out a lot better than hotels, because now you get to have the whole family together in your own ecosystem. You have your own place, your own kitchen, your own living room, dining, everything. And so we're seeing great success from that. And then what that's actually leading to is these people are recognizing, hey, I had a plan. So we had a goal, we had a plan, we set a foundation. I've now moved into my passive income arena, be it land or short-term rentals in my two examples here right now. And now they're coming back because they're saying, look, with the success I'm having, I'm getting more creative on how I can put even more into that foundational cash flow piece. What does that look like for me right now? And so we're having those discussions, which those are the ones that are like super fun for me, because now we're seeing, like Ernie said, the fruit of the labor is coming back. And now we can actually pull off a little bit and replant and get ready to harvest again.
What about you, Stallion? Where are you seeing people have successes?
I'm going to take this a little bit of a different direction. I'm happy for y'all to come back to it. But as you're listening to us, and if you've listened to us for any number of months or years even, the ideas that we share, if you're invested in the market, the ideas that we share seem outlandish to you. They seem like that only crazy people would go and buy raw land and flip it for, monthly payments, or go and rent an apartment and then put it on a short-term rental basis. Like that just seems so foreign. And the reason I'm saying this is because I was there, right? Here I was sitting on hundreds of thousands of dollars in a 401k, like many of you are right now. And people would tell me deals that they're working on. And I was like, that sounds interesting, but it's not for me. Why? Why did I think that? Because I didn't have money, at least in my brain, that I could invest. it was in this very limited little box in my 401k that I could choose from a number of reports that said, hey, last year this fund did this much in return, and the year before it did this much in return. I guess I'll go with the big number. Literally, that was the extent of my investing ability and knowledge. And what I'm trying to tell you right now is what Ernie said is so insightful. Invest in yourself, right? That is what is working right now, because none of the things that we talk about is possible if you choose the easy button and you don't invest in yourself. So I would say start there. And by the way, this community, it may not be the right fit for you. Get somewhere else. Get somewhere where people are investing in themselves and learning what opportunities look like and becoming the kind of investor. Now, if you're at the level of an accredited investor, you need to join us in our passive income mastermind, right? Go to wealthwithoutwallstreet.com/club 200 and apply to see if you're a fit for us. If you're not an accredited investor, you need to be right here in this inner circle, right? Go to wealthwithoutwallstreet.com/free call and join us, because every single week you're getting the collective knowledge of the people who are taking steps that maybe you're not ready to take yet, and you're learning from them one to many. And this is the kind of place that you need to invest in yourself. That's my take on it, Rose.
Ern, what else would you add to this conversation as it relates to where are you seeing others having success? I know a second ago you mentioned, like the optometrist who was investing in his business, investing in a system to where others are starting to create income that he doesn't have to be active and involved in. Any other areas that you could share that you're seeing with people having wins in?
Yeah, two things as I'm hearing this to add to the conversation. Joey, to your point, in our community, one of the exciting things to me and for me is every single year in this community, our members are getting access to more and more cash. How is that? Every single year, we make more deposits, more premiums into our infinite banking system, and there's a guaranteed increase of cash value. We've got more access to cash, more opportunity. That is a direct correlation. It is never opposite, never. The second thing we haven't mentioned, but also pertaining to access to cash, how many times have we heard in our community refinance? The real estate market has created immense opportunity. And now with interest rates going up, just look back over the past two years, really. How many times have we heard of folks refinancing their primary residences, their investment homes, their multifamily properties, and getting the equity out, dry powder to now go? There's nothing wrong with buying when things are on sale, right? We kind of talked about that maybe as a negative a few minutes ago, but there's so much opportunity to that. And that really is low level hierarchy of wealth things: cash value, cash flow, access to cash, investing in yourself so that you can take advantage of these opportunities. And that's not the Main Street route. That's not the Wall Street route. The things that aren't Wall Street is what's working right now.
Man, I love this. Robert Kiyosaki has so many sayings that I share, but one of the ones that I love is the fact that he talks about most people see a coin, right? Like a quarter or whatever, as only having two sides. He says, really, though, it has three sides. It's got heads, tails, and the edge. And too often times, whether it's politics or finance, people only believe that there's two sides. And he says where winners are is they stand on the edge and they evaluate both sides. So if you're someone who has 100% of your money inside the market, then flipping and going 100% the opposite way, as the four of us have already shared, that we have zero money in the market, probably is way too far-fetched. That's not a reality. But maybe you can stand on the edge. Maybe you can look and follow some of the principles of which Ernie says. Do I have money within my control? Do I have the ability to take advantage of opportunities, like you mentioned, Mark, that would give me maybe ways to create cash flow? To do that in a time frame that I don't have to wait until some magical number in the future. right? So as we shared this topic today, regardless of where we are, right? Because you could be listening to this and the market could be up 40%. The point is always the same. I think the message is still the same, is what are you doing and do you have control? And does it really match up with what you want? And if not, take advantage of any of these links that we've shared. Get on a call with one of these coaches, talk about your own situation. While they can't give you financial advice, what they can do is listen to your scenario and point you toward tools that others, hundreds of others, if not thousands of others, have taken advantage of this community. Because we said there was 3 pieces to creating financial freedom. 1 is having a goal. 2 is having a plan. And what we didn't really talk about is 3 is having support. And we've built over 5,000 members inside of our community that have done that and are doing that right now. So if you're not part of a team, if you're not being supported by other people that have the same vision that you have to become financially free, take advantage and join in our community. So as always, we appreciate you listening, whether this is your first time or your 100th time. We're grateful for you. Take time to rate, review our show, share it with somebody so they can hear it as well. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.